Tom Lee is back out in the media being incredibly bullish short-term on this market here. Again, he did get this Liberation Day projection completely wrong. He came out and apologized, but now it looks like he's doubling down on a lot of the statements that he has recently made. Now, what we're going to be covering in this video, guys, is obviously all of Tom Lee's statements, but we're going to be breaking down whether or not a lot of what he's saying here is actually correct and what we can expect out of this market moving forward. Because, as you guys all know, there's a lot of things out there that people are just not talking about that are incredibly important in determining where we head next. If you've been following along on this channel here, again, no filler, no fluff. I actually like to provide some value for you guys in these videos here and not just kind of cover what other people are saying here. So again, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading these videos out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed and turn on notifications so you're notified every time these videos go live. And again, with all the volatility that we're seeing out there, there is a lot of opportunity, especially for those of you guys that are day traders. Again, one of the main problems with people who are day trading is they're significantly undercapitalized. And again, Take Profit Trader is offering probably one of the most insane deals that I have seen in the prop trading space right now. If you guys use code VIX with the link down below, you get 30% off for life, no activation fee, daily payouts, and there's no consistency rules once you pass the evaluation. So if you guys are interested in that, make sure you check out that link down below. But let's roll this clip from Tom Lee and start breaking everything down.
In Fundstrat, head of research and CNBC contributor Tom Lee. Tom, were you getting nervous here with what the market was doing? I know you expected things to go a lot better for the major indices this year.
Yeah, John, I was getting very nervous. I think the biggest sign was I was going to bed every night, checking futures, reading everything, and wondering if the market would open limit down. So I was getting very nervous. But of course, now this is a really big positive fundamental development.
So why aren't you still nervous, given the velocity at which things continue to change? How do you find signal in the noise? How encouraging is it that after saying that they weren't going to negotiate, the administration is now negotiating? After saying they weren't watching Wall Street's reaction, they really do seem to have been watching the market?
Yeah, I'm going to have to make some guesses here, but I think one of the positives is that I think the White House exercised the Navarro put, meaning they are now inserting Bessent more into the negotiating process, which I think is less of a hardline view. When I look at what this means for the next few months, I do think because of the tariffs and they've been dialed down, companies now have what's effectively probation. So if they cut guidance or they don't show guidance, markets can look through it because they know it's an adjustment process. So I think it's taking the pressure valve of investors panicking on earnings. I also think it's been really good news to see Tesla rally because, it's been our view that Tesla's more or less the exhibit A for what kind of bounce can ensue. Because remember, Tesla got hit the hardest first, and actually it's been holding some important levels. And then I think there are things really, as we look towards the next few quarters or a few months, to be positive about, because there is the tax deal. And, at the end of the day, there was a lot of technical damage, but a lot got repaired. So, I do think this was an important day.
So as you can hear in that clip there, we're going to play another clip a little bit later in this video from Tom Lee very, very recently that came out today, but he thinks that this is a very positive fundamental development for the market. Now, in order for it to be a very positive fundamental development for the market, well, you would then expect to see the effective tariff rate overall be lower, but that is not actually what we're seeing here, and this is why that I have labeled this. I've been telling this to my private community time and time again that this is setting up to be a relatively big bull trap, and I was talking about this last night on Twitter here. So as I said in this week's VIX Insights research report to subscribers, you guys want to hop in there, it's $10 a month down below. Even if we see these tariffs walk back, you do not frantically buy the dip. So this is a little excerpt here from what we were expecting going into this week, but what I want to make abundantly clear is that even if we do see a walking back of these tariffs, this does not automatically mean you start frantically buying this dip. Tariffs will still be left in place, and we need to consider the effects of decreased government spending and incredibly low consumer sentiment as we go into the next couple of quarters. Remember, government spending makes up a significant portion of GDP, and when you have low consumer sentiment and confidence, well, consumer spending, as we see here, typically accounts for about 70% of GDP every year, and if the consumer is worried about the future prospects of the economy and sentiment continues to deteriorate, they do not spend money, and this lowers GDP and earnings across the board, and that's just from the consumer side. This is not even talking about new investment, and which is also going to be a big problem. If all of these, let's say, lenders, Wall Street, are uncertain and worried about where this economy could potentially move to in the future, well, they're not going to be lending out money to a lot of these newer companies, maybe some of these small cap companies, and you're not going to see these companies being able to grow at the rates that they thought they were. Then we have to think about that effective tariff rate situation. Lifting duties, the duties on China to 125% and reducing all others to 10% would lower the average US tariff rate to 24% from 27% before Trump's April 9th Truth Social post. So, and this is what I've been preaching to you guys a lot, is that we have to not only be patient here and wait for the market to give us really, really strong signs that it is ready to start moving back to the upside. And what I mean by that is looking at the overall big picture situation and understanding what has changed. Have a lot of these businesses and organizations been able to really kind of get a good picture of where this economy is going to head in the future here? In my opinion here, I would say no. And when you look at especially what happened on, I believe it was Monday here, or Tuesday, when we saw that fake tweet come out that this 90-day pause was going to happen before it got walked back. Well, the White House obviously knew that this would happen to markets if we did see these new crazy reciprocal tariffs being walked back. So that Trump put or economic put that Tom Lee is talking about is in place, but it was really due to the bond market freaking out and not necessarily the equity market. We saw Donald Trump talking not only about watching the bond market late at night and kind of having conversations with Bessent saying, we need to do something about this or things are about to get really bad, but he was also looking at Jamie Dimon's statements in order to make his decision as well. Now, the one thing that we were talking about here too is that we had the ability to move back up to where we were kind of on Liberation Day, because remember, the overall expectation for what was going to happen on Liberation Day was right around that 10 to 20% blanket reciprocal tariff across the board. So the market priced in these new additional crazy reciprocal tariffs and then started to kind of unprice a lot of that out of the market here. But what you also have to realize, again, like Tom Lee is thinking, that this is a really solid fundamental development. One, there's no real deals being made just yet, and also the effective tariff rate now, kind of the average tariff rate on a lot of these imports, really didn't decrease all that much, and that is why I have labeled this to everybody on Twitter and in the private community as a bull trap. Now, in addition to this, we have seen a lot of what Tom Lee calls recently, we've seen a lot of that rage selling. And as we're going to hear in this next clip, we did see a lot of these forced liquidations out of the market. And then also the algos came back in as soon as they saw the news of that 90-day pause and started bidding up the market like crazy. So now Tom Lee is also making what is, in my opinion, a little bit of a critical error here when he is analyzing these markets and really letting price and price action in the short term dictate his opinions here and not necessarily looking at the big picture of what has actually changed, especially when we know that the effective tariff rate only went from 27% to only 24%.
Right now, giving back just about a portion of yesterday's gains. Our next guest says yesterday's big rally confirmed the Trump put is back. Tom Lee, Fundstrat Global Advisors co-founder, managing partner, and head of research, joins us here at Post 9. Tom, good to see you. So, yeah, we were in search of perhaps some kind of a floor level, a Trump put. Maybe we got there. I guess, first of all, let's go to what history says about these extreme type market conditions, right? We saw very rare levels of forced liquidation, washout conditions Friday, Monday, set the scene for the kind of forced buying, panic buying in a sense yesterday. But where does that leave us? Because a lot of those huge one-day rallies have happened in bear markets.
Yeah, I agree. I mean, you know, investors, I think, were fearful we were being pushed into the abyss of a depression. And there's a lot of technical damage that isn't necessarily fixed by just having a one-day rally. So I think that investors are understandably cautious. But one thing that my friend Tom DeMark likes to call is washed out markets.
Yep.
And I think some things really got washed out, and that's what we're going to keep an eye on. I think it's actually kind of constructive. Like the Teslas and the Mag 7, they basically bottomed on Monday.
Yeah.
And so even though the markets were plumbing new lows into Wednesday, they were holding up, and they've made a big move. So I think there's an argument to me that high beta and the Mag 7 are what you want to watch. And I'm kind of in the camp that this is going to extend further, the rally.
The other thing that we have to think about here too is two very important and critical things. One, hedge fund long-short net exposure is the lowest in 9 years. So not only does this show a significant amount of deleveraging out of long positions in the market, but also the addition of new short positions. UBS hedge fund clients on Wednesday added to US single stock shorts and actively covered ETFs. So that was adding fuel to the fire on those upside movements. The combined hedge fund short is about to hit the biggest in history. Now, while they may be correct here, again, it also is possible, we can't talk about this on just one side of it, that if all of these large institutions are piling in on one side again, if some more good news comes out, we could easily see this market push back to the upside. But we already did see some decent news come out this morning, and that didn't really do anything for markets, which is not a good sign. Breaking March CPI inflation falls to 2.4%, below expectations of 2.5. Core CPI inflation falls to 2.8, below expectations of 3%. This marks the second straight monthly decline in headline and core CPI inflation. Inflation has cooled down despite the trade war. Remember, guys, the things that we've talked about on this channel here are that we could easily see this growth slowdown in the market, unemployment going up, but we really shouldn't expect to see a significant increase in inflation due to demand dropping and a lot of the other factors that we have covered time and time again. Now, that March CPI report effectively that we're seeing here today, again, is not going to be all encompassing of a lot of these new tariffs being put in place. So next month's CPI is going to be a little bit more important. And that could potentially be one of the reasons why the market is not reacting positively to this. But seeing the market drop like this the day after that news of the 90-day pause comes out is not a good sign, especially when you have good news, good macroeconomic news coming out about inflation data. So guys, again, you got to be careful here. I've been saying this a lot and I've said it so many times in the past. The moves down in this market here are not the dangerous ones. The dangerous moves in this market are the ones that go vertical and start ripping back to the upside, because it is going to entice you, the viewer, the trader, the investor, to make silly decisions when the overall big picture has not changed. So I really hope that you guys have been paying attention to all the things I've been saying on Twitter, in the private community, in these YouTube videos here. But again, if you guys want to, share this video with a friend, share it in your groups. I just wish more people understood things like this, because you could save yourself a lot of really money by operating in the market, by looking at it in terms of the big picture versus just looking at the price action to be dictating what you do next. Technicals are very important, but you have to understand that there can easily be these bull traps out there in the market, which I still am going to think that this is currently, until things start to change. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys, make sure you go down and hit that like button. It costs you nothing to do it, but it helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn notifications on. But other than that, guys, I will see you in the next one. Peace.